Kitco Mining special coverage of PDAC 2024 is brought to you by Gold Mining, Uranium Energy Corp, and Uranium Royalty Corp.
A record 2024 for Alamos Gold. This is Paul Harris of Kitco Mining at the 2024 Prospectors and Developers Association Conference in Toronto, Canada. And joining me today is John McCluskey, President and CEO of Alamos Gold. John, welcome back to Kitco.
Thank you very much, Paul.
Well, let's start off with last year's performance. Last year, you produced a record 529,000 ounces of gold at one of the lowest all-in sustaining costs in the industry. Congratulations. What's the secret sauce?
Well, it was a matter of investing the capital that would produce that productivity. And we've had just a tremendous run of success. First, the development of our La Yaqui Grande mine, which we built over the course of the COVID years. It came into production in, I guess, in the summer of 2022. And by the time we were in 2023, it was really hitting its stride. And we ended up really exceeding our overall production guidance in Mexico. We produced something like 210,000 ounces at about $600 all-in sustaining costs. So it was really an extraordinary performance from that mine. And that was one, that I don't think most people expected, even ourselves. We ended up getting a lot more gold out of the old leach pad as well, from residual leaching. We thought that would probably dry up in October, November, and in fact, we're still getting gold out of the old leach pad from residual leaching, and that's been a pretty big surprise for us. As far as our Canadian operations go, very similarly, we had great performance from both Island Gold and our Young-Davidson mine. And so they combined to, we already could see we were going to break our previous guidance. And so at the end of the third quarter, we raised our guidance. And then by the end of the year, we'd actually come to the very top end of our revised guidance. So it was a great year.
Okay, your timing couldn't have been better, setting production records as the gold price moved to all-time highs. But was there anything that didn't go to plan, or something that you would like to have gone better that didn't?
In point of fact, I can't think of anything that didn't go our way last year. I mean, the worst complaint you could make is that the inventory costs of those residual leached ounces are roughly, I don't know, what are they, about $1,700 an ounce. So it had the impact of actually raising our costs at the Mulatos Mine, because you've got to book your costs at the inventory model's designated amount. In point of fact, though, the costs were incurred years and years and years ago. Can't even remember when. And we're actually generating the cash flow on the basis of it would have been about $800 per ounce in costs. So we would have made that marginal amount. So if that's your worst outcome, you can count yourself very lucky. I mean, we had a great exploration year. We had a great production year. Safety was just awesome, which is one of the things that really matter around a mining company. So I would say from every respect, we're very happy with 2023.
Well, one of the things people are talking about in the gold sector, the gold price is rising, yes, but all-in sustaining costs are rising as well. And yet, despite that, the sector's still enjoying margins of, let's say, 30 to 45%, which is still very healthy margins compared to other sectors.
Yeah.
Well, what's your view on, are people just getting too well rewarded? Is there too much cash flow generation? And so when it comes down, it becomes an issue?
I would say in our case, that's certainly not the case. And one of the things that really distinguishes what we're doing at Alamos is we're actually bringing costs down between now and 2026. We're one of the lowest cost producers in the sector right now, but by virtue of the expansion that we're undertaking at Island Gold, which will see us sink a shaft and expand the mill from 1,200 tons a day to 2,400 tons a day, we're going to benefit from both the efficiency of the shaft, the tie-in to the grid power, plus the economies of scale. You pull all those things together, costs drop from roughly $1,000 an ounce to roughly $600 an ounce at Island Gold. That's going to have a big impact on our overall production. That'll be roughly half of 2026 production when we achieve that, and that'll be coming in at 600 adjusted for inflation, all-in sustaining costs. So that'll be one of the lowest cost mines in the world, and it'll be generating roughly 300,000 ounces a year. That's just a great story. Bringing on Lynn Lake, same thing. Lynn Lake will be a brand new open pit operation in northern Manitoba. We're tying into grid power again up in northern Manitoba, which is the lowest cost power in the world. Effectively, you'll be producing around 200,000 ounces of gold at Lynn Lake at sub $800 all-in sustaining costs. That's another mining operation that starts to bring down the overall cost of production. So, our outlook going forward is declining costs while we have rising production. And I think that story is really resonating with investors.
That's certainly very unique. Another aspect that you haven't really touched upon, John, you've also been very successful with exploration, replacing your depletion. What's the outlook there?
It still remains very, very positive. You're probably aware we've made a number of very timely acquisitions. We acquired the Young-Davidson deposit back in 2015 when gold was around $1,100 an ounce, and we acquired Island Gold when gold was around $1,250 an ounce. We acquired the Lynn Lake project when gold was $1,100 an ounce. So at that cycle bottom, we were very aggressive in making acquisitions. Of course, now gold is $2,100 an ounce. It's $1,000 higher than when we were making those acquisitions. So right off the bat, you can see, the timing of our execution of those acquisitions could have been better. But what we've been doing since we acquired those assets is we've been investing in capital to turn them into really productive gold mines. So when we took over Young-Davidson, for example, it was producing at 3,800 tons a day, and it was barely breaking even, a lot lower gold price as well. Well, today, with the investment that we've made in all the lower mine infrastructure, that mine produces at 8,000 tons per day, and all-in sustaining costs around $1,150 an ounce or so. So we're generating phenomenal margins. Since we finished the lower mine expansion at Young-Davidson, it's been generating $200 million a year in free cash flow. So we did that in 2020, 2021, 2022, and now 2023. So it's just generating phenomenal profits. Now we're going to do the same thing at Island Gold.
So you walk through your office high-fiving your business development team.
No, I think we're all pinching ourselves, actually. You can hardly believe how well it's worked out. Execution's a big part of it. You can all sit around and saying, well, yeah, if we sink a shaft at Island Gold down to 1,350 meters and expand the mill and everything, of course, we've got to go after all the permits. We've got to get the permits from the feds and the provincial government, and we've got to get Well, you can talk about the plan all you want. Executing on that plan, that's really the key. And our team has just done a phenomenal job on execution.
Well, I'm glad you mentioned the word execution. And let's broaden the conversation. The gold sector's seen some mega deals. We created companies that so far haven't really been delivering performance. They're struggling to replace their depletion. Execution's been come into question. Has the sector created companies that are too big to succeed?
Well, first of all, I think when you have a very big company and you're taking over another very big company, you're not going to see, quote unquote, results in 2 or 3 quarters. You've got to give a merger like that the time to season. And my guess is, if you're referring to something like, Newmont merging with Newcrest, for example, I think by the time you've finished all your integration, you've got rid of your non-core assets that emerge out of a combination like that. You start focusing on synergies and so forth. It's going to take you 3 years, realistically. And then once that's done, then a merger like that's ready to take off. I mean, even on our own case, when we bought Island Gold, initially it was very poorly received by the market, but almost immediately we started to increase reserves. We invested very heavily in exploration, and within a few years, we'd driven that asset from under 2 million ounces in reserves and resources to over 6 million ounces net of depletion. So we had a very, very successful run in exploration, and that actually provided the backdrop for us to invest the capital to turn that into a much bigger mine. Well, think about that undertaking for a relatively small, straightforward project. Then you multiply the complexity of a deal like that, probably 5-fold at least, when you try to combine two companies like Newmont and Newcrest, you've got to give it some time to happen. I think they'll ultimately get there. Those are good, solid companies, good people. I think they get there. But it is much easier to run a company the size of Alamos. And therefore, I think investors can probably draw a far shorter line from, when we announce something that we're going to do and at the point in time when we're actually going to execute on doing that.
It has been a fantastic 3 months of physical gold, being pretty much over $2,000 per ounce throughout that time since early December. And yet gold equities continue to be in a slump. Why do you think there is that disparity?
Yeah, I've been at this for quite a while. I've been watching the gold price for decades, frankly, and watching how the equities track. And there's been occasions where gold equities have led the gold price. And there's been times like this one where they lag. And I would say that as an industry, clearly we're lagging the very stellar performance of the gold price over the last little while. But again, I think you give it time and eventually you're going to see buyers come back to the equities. In our own case, we haven't lagged at all. We've had just tremendous outperformance over the last 18 months, really. And we've seen, for example, in the first part of 2024, the first couple of months of 2024, our stock dropped 20%. But between, say, the middle of 2022 and the end of 2023, it had risen probably 75%. So we ran 75%, we gave back 20, but now I think after that pullback, we're ready to start climbing again. If you keep in mind that 20% pullback happened while we were basically releasing very, very good news, great results for 2023, great forecast for 2024, great exploration results. We announced our update in reserves and resources. All the news has been very good. And despite that, our stock price came down. It just comes down to profit taking, really. If you're sitting on a massive gain over the last couple of years, it's only natural investors are going to take profits. But that was stock that went from, call it, weaker hands to stronger hands, because the profit takers naturally, it's time for them to get out and move on. Well, the people that bought it, they're looking for the next run. And I think that's what happens with the market. I think it's happening to the market in general. It's happening very specifically for our stock. I think investors are lining up for the run to $30 a share. That's what I think.
We're coming through a lot of conferences at the moment. What's the message you're hearing from investors? Are you attracting new investors? Are you attracting generalist investors?
In point of fact, we are. And that, to me, is a very, very welcome sign. So we had over 50 meetings at the BMO conference just week before last. And this, to me, is it's a tremendous sign of interest. I would say 20% of those meetings were with either new investors or called them non-resource investors, more generalist investors. That to me indicates that the interest is out there. These are the early arrivals, right? These are the people who are not waiting, for gold to hit some magic number, $2,500 an ounce or whatever it is. They're getting positioned now. And already since the BMO conference, we've seen the gold price come up, but there's been a lot of buying coming into Alamos shares. And our stock's come up almost $2 a share since the end of that conference. So the buying interest is there, but they're going to focus their dollars on the companies that are doing well. You need to be in low risk jurisdictions. You need to be hitting your marks. You need to show, several years of really solid performance to give investors confidence. And that's what we've been doing. And I think that's going to be what the whole sector is going to have to do in order to attract a broader market, broader attention to what we're doing as a sector. I think the gold price will be a catalyst for making that happen.
Over the years, John, you've done some very intelligent M&A. With the low valuations of a lot of single asset developers out there and exploration companies at the moment, is this a time where potentially for Alamos it's a time to put in some things for the future pipeline?
Well, I think I've referenced the fact that behind the Island Gold expansion and the expansion we're going to be doing in Mexico at our Mulatos project, where we've basically just discovered another 1 million ounces of high-grade sulfide. So we're talking about a whole new type of development there that'll bring in sulfide resources into our production in Mexico. We've also got the Lynn Lake project in the pipeline, and that's coming up. Probably early construction will start in 2025 on Lynn Lake. That's a lot on our plate, and so it's not like we're suffering from a lack of opportunities right now. I think we've got lots to do. Are we being opportunistic? Are we willing to be opportunistic? I'd say yes, we are. We always have been. But despite low valuations, along with those low valuations go certain risks that I think the market is starting to put more emphasis on. And I'm speaking specifically to political risk and permitting risk. So political risk. There's certain countries in the world where, people thought it wasn't necessarily a big gamble to go there and invest a lot of money. And, Panama is a classic case. Some big companies poured many billions of dollars into developing Cobre Panama, but they've run into a political roadblock, at least for the time being. We're all hoping they get it sorted. But investors are quite risk averse when it comes to mining companies like ours going into what they might consider sketchy jurisdictions. Second, permitting risk. Even in countries like Canada and the United States, Australia, all the what might be perceived as safer jurisdictions, investors recognize that it's very difficult to get mines permitted these days. It can take a long, long time. And I think those are the very issues that are holding some of the better juniors back right now. And it doesn't make matters any better if we acquire those projects. We're still facing those same permitting risks. And I'd say from that point of view, we're being very, very careful about what we look at and what we're willing to acquire.
Well, what about execution risk, John? You've been very successful in developing new mines, but some of your peers in Canada, I think there's 5 or 6 new mines coming into production now or this year or very soon. And I would say at least half of those have had some execution issues.
Well, mining is it's no cakewalk, right? It's a very difficult business, and even some really solid teams have run into some unexpected problems along the way. Most of the problems that have made the headlines in the mining industry, they've been specifically related to earthworks, just unanticipated ground conditions that have led to, in some cases, hundreds of millions of dollars in cost overruns. Obviously, that was very bad news for their shareholders. It's not like we're immune from those kinds of risks. Naturally, we face very similar sorts of challenges as we go to develop mines. I would say we've been fortunate in putting a great deal of time and effort, specifically where building tailings facilities is concerned, putting in the groundwork for example, at our Island Gold mill expansion. We collared the new shaft in bedrock. There's not too much that's going to go wrong when you've collared it in bedrock. On top of that, the mine has been in production for more than a decade, and so we have a very good understanding of ground conditions. Those are very valuable bits of information to have when you're about to sink a shaft 1,300 meters. So I would say what we're doing at, say, Island Gold with our big investment there isn't directly comparable to some of these other stories, because those were more or less brand new projects, had never been mines there before, and they were just starting off and not really, we're not really fully informed in the way we could be building something over an existing mine. So it's been unfortunate the way some things have gone, and I know that's hurt investors. But for the ones that are still coming on, fingers crossed, because we need everybody to be successful.
Given your successful performance, do you feel vulnerable as a takeover target?
Well, even if we weren't that successful, I think anybody who ignores the fact that this is an industry that that is ripe for consolidation, I think they're being naive. You've got to recognize where you fit in the pecking order. I think there are stories of companies out there with, arguably good assets that haven't run them well. Well, they're vulnerable for takeover as well. In the case of our mines, I think we have very good assets that are being very well run. And you could argue that might make you a more attractive takeover target. I would argue the opposite. And here's why. By executing very well and running our business very well, our investors are giving us a very high valuation. So it becomes more difficult to justify walking in and paying us a premium for our shares. You've got to have a very creative vision for where you think things are ultimately going to go for Alamos. Now, I happen to think we're actually very well positioned. Everything that we're working on right now is growing. We're growing resources and reserves. At Mulatos, we're growing resources and reserves. At Lynn Lake, we're obviously growing resources and reserves at Island Gold. And Island Gold is one of the highest grade gold mines in the world. And it looks like it has every opportunity to go as high as maybe 10 million ounces. I mean, if you don't count what we've already mined, we're at 7.5 million ounces because we've already mined about 1.5 million ounces out of Island Gold. So is that of an attractive scale for a major to acquire? Obviously it is. But I just think that the way the market is unfolding, the majors by and large are going to stick to what they're doing. If you look at an Agnico, for example, they've made a number of massive acquisitions over the last few years, and you could say they've got to go through that period of integration, digestion, before they're ready to take the next step. Similarly with Newmont and Barrick, I mean, they've got lots and lots of opportunity within their own portfolio to grow. So I don't think there's anything imminent coming down the track. There's always that vulnerability. But right now, I think we have a real window here to grow our own business over the next few years.
Okay. John, to close up, where do you want Alamos Gold to be by the end of the year?
Well, I think we are up for another solid year of execution on our forecasts. I'm very confident we're going to produce at least 500,000 ounces at industry-leading low costs. That'd be a great achievement again. I think we're going to continue to have a few more success at exploring, particularly at Island Gold. But I also think we're going to see great results coming out of our PDA discovery in Mexico. Definitely going to replace depleted reserves for, what would that be, the 6th consecutive year. That to me is, that's a worthy objective. Will we find an attractive new company to acquire? That's a long shot, but you've got to swing for the fences, so to speak, and we're going to continue to do that. But that's not the primary goal. The primary goal is to keep on making money for shareholders, keep on building value, justify the premium valuation that our investors are giving to us. That's the key.
Well, I wish you a very successful year, John. Thank you very much for joining us today.
Thank you, Paul.
And this is Paul Harris for Kitco Mining at the 2024 Prospectors and Developers Association Conference in Toronto, Canada. And if you like what you see, don't forget to subscribe.
Kitco Mining special coverage of PDAC 2024 is brought to you by Gold Mining, Uranium Energy Corp, and Uranium Royalty Corp.